Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it 22 years ago, way back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and mechanical trading systems, which is my personal passion. Anyway, it is Wednesday, July 16th. As you know, a lot's been going on in the market. It's been a very choppy week. Trump's been helping gyrate the market a bit, with his comments about Powell. Is he going to fire him? Is he not? Etc. Anyway, we'll review everything in depth. And this here is our backend recorder for our website subscription service. And if you're just a YouTube subscriber, you should consider subscribing. I think you'll be impressed. Anyway, I'm going to get this recording started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, July 16th newsletter. Tonight's newsletter, as you can see, divided into 9 major sections. By the way, I did add some trade ideas, some pretty nice looking longs. And again, for this newsletter, like I said, going to cover the general things I always discuss, my opening discussion on the market. We'll look at the general market indexes. We'll also look at Matt's Macro Vision, my new long-term hold swing plays section. Review the bonds, few sectors, commodities, currencies. US dollar's been strong lately. Nice rally off the bottom. Crypto, Bitcoin, Ethereum. Those have had really nice moves this week. We'll look at precious metals and going to, like I said, review some actionable trade ideas. Now, as you know, this week we had the inflation data, the CPI on Monday, that's the consumer inflation, and we had the PPI, producer inflation, today. The CPI came in slightly higher than expected, while the PPI, producer price inflation, came in slightly better than expected, or lower than what they were forecasting. So kind of a wash, really. And today the indexes were down for the first couple hours, especially after some comments from Trump regarding Powell. I'm going to replace Powell, etc. Market didn't like that, obviously. But then, later on he said, well, I may not do that. And so then the market rallied back. Trump likes to kind of troll things, or, it's also part of his art of the deal where he throws stuff out there that he's not really intending to do in order to get a reaction, whatever. So anyway, markets have been gyrating around, but the only thing I will say is that, hopefully I would hope that Trump knows, and people around him would know, that, the Fed does not control the long-term interest rates. They only control overnight rates. So, so if you put someone in there who's just going to lower overnight rates, the bond market has to agree and lower long-term rates. They might not. They might do the opposite. So, the only way you could really force the long bond is if you started doing QE again and monetizing the debt. And none of us want to do that. Again, anyway, for this week, the market is kind of mixed. The S&P and Nasdaq are slightly up, while the Russell and Dow are slightly down. Okay. Energy stocks have been quite weak this week, and crypto, of course, has been quite strong. And remember, we're also in the beginning of earnings season. Usually the market holds up pretty well during the earnings season. Doesn't mean you can't have some gyrations in the first part of it, but I think when we start getting the big boys reporting, then I think the market usually holds up quite well. Next, item number 2 shows the index sector table, what transpired today and this week. So you can see major indexes, they came off those morning lows, with the S&P up about 0.3%, Nasdaq up about 0.25 or 0.25%. The Russell led up 1%. Now for the week, some bifurcation. The Russell and the Dow are still down slightly. The S&P slightly up again, so pretty choppy week. The Nasdaq tech area is up 0.7 to 0.6%. As far as the market sectors here, most of the sectors were up today, albeit fairly small moves. One of the weaker sectors this week has been energy. Oil services down 7.6%. Energy XLE down 3.3%. Transports down 2.4%. So home builders down 3%. Currency-wise, US dollar down 0.36% today, basically pulling right back off that 50-day moving average. Remember I said it really needs to recover and hold above the 50-day. So it's stalling there once again logically, but we'll see what it does. Otherwise, it's up 0.44% for the week. Bitcoin up about 2% today. Now, Ethereum's been super strong lately, up 7.75% today, up 13.8% this week. Over a week ago, we commented that we liked Ethereum, and that's moved very nicely. So hopefully you participated on that. Maybe not crypto, but especially some of the stocks like ETHE or ETHU that we've been showing. Commodity wise, DBC, the index up 0.13% today, but down 0.9% for the week, largely due to crude oil. That's a big weighting of DBC, which is down 2.7%. And see, natural gas up 1.7%, copper slightly down. Uranium continues to be quite strong, up 2.1% today, up 6.6% for the week. All the ags have been fairly strong here. And precious metals were up today a little bit, gold up 0.5%. Platinum, palladium, remember those are in my Matt's macro long-term ideas. Man, they continue to rock. Up big today, up 3.8%, 3.4% respectively. Bonds, we had a nice pullback in the 10-year, 30-year Treasury yields today, but still up for the week. Next, item number 3 shows the economic news calendar. Like I said, we had the CPI, PPI inflation data today. Tomorrow, the 17th, we have retail sales, initial jobless claims, import, export, etc. Housing starts. And remember, guys, we are in the start of earnings season. So image number 4, here's a nice image showing you some of the earnings. These are the big ones. Again, some of the major tech stocks will report later on, but these are the initial ones that start. We had a lot of banks here report recently, as you know. All right, guys. Now, Matt's macro vision. This is my long-term trend trade ideas. These are areas that I think are having major trend reversals that could perhaps be held for months to years at a time. I've done a pretty good job over the years about finding these, such as uranium back in 2020. Gold, precious metals back in last year in February, etc. I've had quite a few of these, but the problem is they get lost in the shuffle with all the newsletter charts, so that's why I've made a section. All right, so anyway, I'm not going to go through all of them, but just give an update. So REMX, this is the rare earth strategic metals ETF. I put this out basically mid-June. It was in this really nice wedge pattern. You got a weekly demand zone, just a beautiful chart. You got a double MACD divergence. Everything was pretty exceptional here, and so far it's broken out. It's been up here 2 weeks in a row. It is getting a little stretched short term, but remember, this is a long-term play, so you have to decide what you're going to do. You can either just hold the position, or maybe if you take some profits and you want to buy a pullback dip, something like that. Okay, next, chart 7, here's LIT. This is the global lithium play. I also added that to the section back in early June. Finally broke that long-term downtrend line weeks ago. Now, the broken downtrend line will now potentially be a support if we get a nice pullback here. So realize that. So far this week, it's down about 1.1%. Next, chart 8, here's platinum. This is the platinum ETF. And as you know, I was pounding the table back in March and April on platinum, not just on a technical perspective, but on a fundamental basis because of the imbalances in supply and demand. And that's really what moves commodities longer term on these macro scales, right? But anyway, this thing, despite being quite extended, right now it's coiling once again. So we'll see if this breaks out yet again or not. Now, if this breaks out one more time, we're going to set up some sort of MACD divergence there. And that could be maybe some sort of fifth wave high, and then it will finally need a decent correction. But man, it's been a big mover. Chart 9, here's the monthly chart, of course. Like I said, broke out of this beautiful multi-year coil pattern, and it broke out in June there. It's up in July. Now it is stalling a little bit in this supply zone, but remember, this is a long-term play, guys. we just came out of this big coil. We have supply demand issues longer term that will fuel upside potential for a long time. Moving average ribbon is just starting to expand. So again, I am a buyer on major corrections, but I hold a core position. Okay. But again, anyone who bought this in May or whatever, even in early June, you've done damn well. Next, moving back to the general newsletter again. So image number 10, here is the S&P and SPY high performance KISS systems. So I've been showing these lately, as you know. Again, no changes. They've been long. The SPY version went long essentially on April 7th, right at the lows on that big up candle. The S&P cash, which you can't trade. Again, you can trade SPY. That's why I've been showing both of these. Went long about 2 weeks later, but really essentially around the same price, because after that big up candle on April 7th, you could see it had a little ABC pullback, a higher low, than it bounced. That's where it went long. But anyway, they've both have stayed in these uptrends very nicely. S&P has a smart trailing stop at 61.34. I've been showing these with these experimental mean reversion on the chart. You can see on SPY there's been 2 entries, and on S&P there's been 3, and actually there was one yesterday. So it took another entry there yesterday. Now again, we're not submitting these out to the website to subscribers yet, because I'm not sure how I'm going to handle these, or I'm not even sure. I haven't decided on the exact settings yet, but I'm just showing you that this version at least went long yesterday. Now, where would it stop be? It would be right there at the 61.34. Next, image number 11. Here's the 4 time frames we like to show. So sorry about that, guys. Let's just go ahead and move on here. A little glitch. So back to the standard chart. So chart number 12, here's the standard daily S&P 500 chart. So again, no changes, guys. We've been, in this nested 1-2-1-2 off those April 7th lows, as I've been talking about. We've been going a little sideways, chopping around here for the last couple weeks. Yesterday we had a nice pullback right to the 90 EMA. Today we had that move below the 90 EMA in the morning and then recovered. Okay, and recovered that 90 EMA. So we're still holding that 90 EMA on a closing basis. So we'll see where we go from here. Again, lots of support. The first support's the 90 EMA on a closing basis. But then below that you have the 20-day, you have the horizontal line, which was the previous all-time highs at around 61.50 from February. Then you got an open gap down here. There's a lot of support below. The big question is, do we get another pop yet again to the upside here, or do we pull back more first? We'll see. This area here is obviously a big support right around the 20-day and 61.50. Honestly, I wouldn't mind seeing a pullback here to work off a little of this early in earnings season before we get the big boys reporting, but we'll see what happens. This has definitely been a very strong rally off the lows, and it's been a Teflon market. Nothing seems to bother it. Next, chart 13. Here's another daily S&P 500 chart. Steve had this over the weekend, and he illustrates if we do have a pretty decent pullback, it would be a wave 4. But again, so far we haven't started anything yet. And we could still, this wave 3 of 5 here could still be shifted to the right should we go ahead and make another high once again. You can see the big demand zone down here. That's well below. Like I said, guys, the market's in a very strong uptrend, and still you start losing the demand zones. There's no reason to be bearish on anything. Next, chart number 14. Here's the zoomed in daily chart with the channel I've been showing. So again, the uptrend channel support, horizontal line here at 61.50, etc. So you can see these 2 moving averages are starting to pinch together. So we have a doji today. We still held that 90 EMA. So can we push one more time here, or do we finally pull back? Tonight, futures are down a little bit, but again, 10 points is nothing in this type of market. Next, number 15. Here's a 2-hour view. So we discussed this on the weekend. You have a demand zone down here, first demand, which we bounced off of today. That's one reason we bounced. And also notice the pullback today. You see this upper trend line that we extended out? You always want to extend out these trend lines, guys. So despite the fact that you broke it here in late June, extend it out. Notice you tested it, retested it once here, and then at today's lows, you retested it here at 62.01. I mean, absolute textbook perfect. We bounced right off of it. But also we had this small demand zone. We bounced right off of it. You had this kind of a wedge-like pattern here, little 3 pattern push on the RSI. Yesterday we had that little Pinocchio move above the top of there before reversing. So we've bounced back. So again, do we form a lower high then come down again? I would prefer that, or do we simply rally to a new high? We'll see. Next, chart 16, here's a 30-minute chart, just shows you the same thing, this kind of wedge pattern. Again, we broke in the morning before recovering. So again, we haven't taken out the highs though. And chart 17, here's a 15-minute view showing that same wedge-like pattern. You can see the move down this morning before recovering. And we'll see where things look tomorrow. Next, chart 18, here's the triple Qs, high performance KISS system. Now, just like on the S&P 500, this also took another DS entry yesterday. DS is that mean reversion system inside the KISS system. So the KISS system went long on April 7th on that big candle, set a stop at the low essentially, which held. It's moved the stop up all the way over time. Current stop is 536.25 roughly. So, but it took another entry here. You could see the 2 previous mean reversions would have been nice winners. So again, just like I said, the beauty of the mean reversion trades inside the KISS system is you have a stop. Your stop would be the 536.24 if you just started selling off. Next, image number 19. Duplicate image of this, so let's move on. Next, chart 20. Here is triple Qs, standard daily chart. Again, just like on the S&P, you have a doji today. It went a little below that 9 EMA before recovering right a bit. Very strong the Qs are here. You can see it tag the upper portion of that small demand zone. You got a larger demand zone down here on the weekly. Again, I've been discussing this, guys, so it shouldn't be anything new. So again, we haven't broken any supports at all yet in this market. Next, chart 21, here's a half-day chart, just showing the same thing. Small demand zone here, you got larger demand zones down here. Again, should we break this demand zone, then we would start to pay attention to these lower demand zones, but we have yet to break any of them. Next, chart 22, here's the 60-minute chart. Again, held this trend line on that pullback this morning, bounced, but so far right in the middle of that range. Chart 23, 15-minute view of the Qs. So you can see that spike down this morning before recovering about just over 61.8% of that decline. Next, chart 24, NVIDIA. Again, NVIDIA just extremely resilient, as you know. It's been in this nice uptrend channel working on this wave 5 pattern. KISS systems have been long this the entire time. They are up very nicely. I think 55%, something like that. So congrats. Again, no changes, guys. It's just simply riding up this steep uptrend channel. Next, chart 25, Tesla. I've been showing this for a while. Again, it recovered, as you know, once. It's been holding this demand zone since early June. And really the pattern to monitor right now is the coil here. You know, there's been a lot of noise here with Elon, and you know, everyone knows Elon's personality by now. And again, Tesla's not really so much about the car anymore. It's about all the other stuff, you know, the taxi service, all the data. Tesla is so much more than just, you know, a physical car company now. But we'll see what this does over time. But right now it is coiling. Next, chart 26, here's IWM small caps. They've had a nice move. Remember, they got into that supply zone. They did pull back from it though. Notice today's lows tested the 20-day moving average in blue. And also we had a demand zone there where we bounced right off of. So again, guys, until the market, you know, breaks structure and loses some demand zones, there's really not much to say about it. We're just continuing to uptrend. Next, chapter 27, here's the VIX. The VIX, was up initially today, as you'd expect in the morning, and then pulled back, so it's just right in the middle of its range. Next, chapter 28, here's 10-year Treasury yield. As you know, it broke out of this wedge pattern a week and a half ago, and rates have been pushing higher. But otherwise, a little pullback today, sort of an inside day. Chapter 29, HYG, high yield corporate. Remember, this tends to be a leading indicator. It's pulled back here the last couple weeks. Now, the bullish view here is you got a bull flag forming. You have the 9 EMA, pension in the 20. So energy is building here. This could easily pop to the upside. If it does, that would likely pull the market up once again. Next, moving on, just looking at some of the major sectors. Here's XLK Technology, pullback, but recovered right again. Just the epitome of strength. Again, sad divergences on the way up on the RSI and the MACD, but guys, divergence is not a sell signal on its own. Follow price action. Next, chart 31, here's XLC, communication sector. Now it's been had a little more consolidation obviously than XLK, but it's got to kind of have a flag look to it into the 20-day. So I'd added a downtrend line. So if this were to break the downtrend line, that would be positive for the market. Chart 32, semiconductors, another doji, but still hanging, still holding that 9 EMA on a closing basis for now. Next, chart 33, financials. As you know, financials and banks have been quite strong, but they've been pulling back here the last couple weeks. Nice recovery today. Doji, they recovered right over the 9 EMA or the 20-day, maybe flagging here perhaps. Chart 34, banks, same deal, little three-wave pullback. You can see the doji here bouncing right off that steep uptrend, up the steep 20-day moving average. Chart 35, XLE Energy. Remember, I pointed out this double top last week, so it's been pulling back. Still holding this uptrend line for now, though. Moving on to commodities, chart 36, DBC, the index, down 0.9% the week. Like I said, it's been in this pattern for 2.5 years, this range. Chart 37, crude oil itself, it did pull back today, but notice it held this big support area, formed a black candle doji. Last week it pulled, or this week on Monday, it pulled right back from the 200-day moving average there. Chart 38, copper, slight pullback here. Remember last week we got the big pop on the Trump tariff, but otherwise holding the 9 EMA. Chart 39, DBA, agriculture. After losing that 200-day moving average a couple weeks ago, it's been more sideways movement here. Chart 40, here's URA, uranium. Remember I pointed this out on Monday, finally breaking today. This looks like a fifth wave move, so it's likely to set up some MACD divergence here. This is clearly a big wave 3 of some sort. This is a wave 4 consolidation, but nice move. Uranium has been a super strong sector, and this is a sector I've been bullish on since December 2020. Chart 41, CCJ, one of the major uranium stocks, has a similar look to it. Next, chart 42, Bitcoin. So Bitcoin, pulled back the other day, but bouncing again here. Now the big move has been really in in Ethereum. We'll cover that in a minute. Chart 43, IBIT, Bitcoin ETF. We pointed out the trade idea here. It popped last week off of that uptrend line. This downtrend line, that was a nice entry. Nice pop. Chart 44, Ethereum. This has been the runner. This is up 7.25% today, up over 13% this week. Big move. Chart 45, here's Ethereum on the weekly. It's up 13.5% for the week. Really nice bounce off that big supply or demand zone in April. This is mislabeled. It should be demand zone. Chart 46, ETHU. That's the leveraged 2x ETF. Big pop up 22.5% today. ETHE is the non-leveraged, but this is my preferred way to play it. We've put these out, guys. Ethereum out over a week ago. Really, hopefully you caught that. Looking at some of the individual stocks or crypto stocks, here's Wolf. It's continued at a decent pattern here. Still looks decent here. Let's see if it can break out of here. Chart 48, WGMI, also a nice little pennant pattern here. We'll see if it can break out over 2680. Chart 49, MSTR, another one. And you can see a little potential breakout over this level. All right, moving on, US dollar. Here's US dollar ETF, UUP. Remember, a few weeks ago, held that big support zone that I pointed out. But notice it's struggling right around this declining 50-day moving average as you'd expect. But I do think the dollar has put in some sort of decent bottom here. So now we need to see a higher low. Chart 51, here's the dollar index. So again, notice stalled right at that 50-day moving average. Remember, it stalled there 2 other times. It needs to really confirm a bottom completely. It needs to break the 50-day and hold it. Okay, but we do have nice MACD divergence here at the lows. So I do think it's possible we did put in a bottom for the dollar, but it needs to clear the 50-day. Chart 52, here's the dollar chart with the wave count. This shows a completed wave 5. Wave 5s always have MACD divergence. But again, we did pull back right off the 50-day today. Next, chart 58.3, here's the weekly view. Remember, we were in that demand zone for the last 3 weeks. We bounced off of that, bounced out of it for now. Chart 54, here's the monthly chart. You can see this uptrend channel going back to the 2011 lows. So essentially, so far, we've held that. That was a big area to watch, again, as I pointed out a month ago. Moving to precious metals, chart 55, gold up 0.7% today. Otherwise, again, it's still in the confines of this symmetrical triangle pattern. We'll see which way this resolves. Again, usually odds would favor an upside break since it's formed in an uptrend. But again, we'll see. If that dollar confirms a low and starts rallying, I could see this breaking down. I'm still thinking that this 3,500 spike back here in April was a blow off for a while. But we'll see. It's still in a symmetrical triangle coil. Chart 56, SLV silver broke out of that short-term coil, pulling back here a little bit, but still looks decent. There is some R-side divergence here. I do like this longer term, of course. One of my Matt's macro plays. Chart 57, GDX. So far, it's been holding the 50-day moving average here. It's just chopping around in a range. And finally, guys, let's review some trade ideas. So on Monday, I put out Goss. So it had a cup and handle look to it here. Yesterday, pulled back. Steve didn't put it in his newsletter, but, there was absolutely nothing wrong with it. In fact, this pullback yesterday that retested this trend line was a great buy. I like buying back test instead of just chasing breakouts. But anyway, this broke out today, up 14.5%. Big move. Chart 59, SRM, it's also been on the watch list. Huge pop today over the trend line, up 53%, guys. 53 frickin' percent. Chart 60, HUBC, we've been following this. Really nice base. Cybersecurity's been all in the news. Look at this puppy. We pointed this out over a week ago. If you were in some, big move today, up 36%. Chart 61, KSCP, one from a couple weeks ago. Resistance was the 650 area. It's been pushing higher in a slow fashion, but still a nice percentage move from the 650 break to the 820 it is right now. Chart 62, NBIX. This one hasn't really been to get going yet. Broke out of this little pattern, back tested it, especially yesterday, but bounced today. I'd keep a tight stop on it at this point. No reason to let it come back inside this pattern now. Next, chart 63, Hive. This one's still monitoring. I like the volume patterns here. Chart 64, here's some other ones. DEFT, D-E-F-T. This is from Monday. And you actually had an opportunity to buy this today or yesterday on the pullback retest of the trend line. I actually have a little bit of this, so it enables me to have a tight stop. But volume patterns look good, so we'll see. Chart 65, AEVA, nice little falling wedge here. We'll see if it can pop out of here. Chart 66, ARQQ, did break out of this trend line today, but I love the volume. This is one to watch for possible momentum follow through. You also have a cup and handle look to it here. Chart 67 BTM. Bitcoin Depot. Again, everything is, the miners are being, Bitcoin's been getting such press, so this has a really good look to it, long over this trend line. Chart 68 DYN. Looks like a pharmaceutical of some sort. Really nice basing pattern here. Very good volume, so basically your trigger would be over today's highs, over 936. Chart 69 ADTN. It popped out of this flag pattern, but look at the volume here. So again, obviously if you could have bought the break of the flag, that would have been best. I'd only seen the chart after the close, but I think this could follow through over today's highs. Chart 70 ACHR. Nice pattern here, good volume, kind of a coil look to it here. So anyway, guys, those are some ideas, and we'll see what happens tomorrow. Again, have a wonderful evening, and thank you for all your support. And again, if you're just a YouTube subscriber, please like, subscribe, make a comment. That helps us out. And definitely consider subscribing to Breakpoint if you haven't done so. Anyway, take care.